Guys, on to episode 2. Now, yeah, so short introduction there, but what's very, very important is that these mini highs and lows, which we can spot on the lower time frames 37 and 2, these mini little highs and lows, they can be tracked, they can be traced, and we can find great trades from them, and we have to sometimes really zoom in and focus on these fine details. Focus on these fine details to get these trades, get these high reward, low risk trades, and take multiple of these throughout the day. So obviously you have the astronomics and that side of things with all of the fundamental data. So please, I'm focusing mainly on technicals, but please do your studies, do your homework, and combine that knowledge with the knowledge that I'm portraying and sharing here. So let's move on to another currency pair. All right, let's look at euro dollar. Same thing, let's look at the weekly time frame. Okay, these are some of the old lines. Right, weekly on euro dollar. Right, I've gone through and I've placed on the weeklies 1, 2, 3, 4, 5, a couple down here as well. There you go, from the highs and the lows. We could even go into, okay, let's bring this toolbar across. We could go into here. So we have the low there. Okay, when the market opened, okay, we gapped down a little bit. We did come trail to the downside, but we stayed above the previous week, as you can see there, okay? What do I expect here? Now let's look at the 10-year yield. It is on a major area of support, but we could have found a top here as well. Again, go into Nat's information and the fundamental side of things to see what updates are going to be released in terms of this 10-year yield. When this 10-year yield goes short, if we do break the support 1, support 2, maybe come all the way back down to 1.27, it could give euro a boost. However, the euro price action on the weekly, so let's look at the monthly as well though. The monthly, we have had an up month, okay, two bullish months, and we're coming into a new month now. Now, with that being said, we have come to this territory where the reason as to why the market's pulling back is because we have this huge supply area. Okay, we have multiple levels of resistance, 1, 2. So what happened last week is euro traced above, but broke back below the prior week. And we can also see over here as well where that line is actually gauged from. Let's go into the day. Okay, so the daily is a little bit sticky, it's a little bit messy. However, we can see up, down, up, down. We're trapped in consolidation. We have the fake out high. The next day we ripped back to the downside. We rip back to the downside, and then what we've seen here is this consolidation area. So what I did, let me just fix that. That's on the bottom of that daily low. All right, and what we can also do, let's remove that. We can also go track trace there at the other daily low. Okay, so the daily low was formed. And what we can also do, we can put the high on there as well. The high was formed, we opened, stayed below the high on that day, forced back down, broke the previous low of the day, formed a new low. Next day, doji candle, went to the lows, breached that back above, went to the highs there as well. As you can see, we stayed in that range. Here we tracked all the way through to the downside, stayed above 1.2125. Came all the way back above this area on the weekly as well. We came back above the daily, but we also respected and stayed below that there. Okay, so very, very straightforward price action. Now, what can we expect if the US 10-year does start to decline? Let's have a look at the day on here. Low high, low swing, swing. I haven't marked this out properly. But if we do start to break this area 1, 2, 3, it could give Euro USD a reason to go ballistic to the upside. Okay, go ballistic to the upside. Now, 30-minute time frame. Let's have a little look at as to what has been going on over here. Now, on the euro dollar, okay, as you can see, a lot of just sideways action, breaching highs, coming back to the lows on the weekly, going back, boom. We see the forceful push here, bang on the London session open, push to the highs, consolidate, consolidate, consolidate. And what we can also do there to give us some further clarity is add on our 30-minute areas. So the 30-minute, it was respected once, twice. Then we were coming into the more or less last quarter, I would say, of the US session. We respected that quite well, and then the market started to dump. Okay, we had a dump there, and then over here as well, simplistic factors of, okay, there's the high. If we really zoom in, the high was formed, one, test, 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 and at the same time there's an area here, there, okay, where the market broke once, came back to test, broke secondary, and this is 11:30 at night. This was just before the Asian session, but we had 3 tests on this area. Then we came back down to test the weekly area as well. So the weekly and the daily areas serve very, 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 very well for our trade boundaries. And also Euro USD, to me, it's not a pair that I enjoy trading, mainly because of the movement. As you can see, it can get a little bit erratic at times, and even these pip differentials, it's not really too much. Whereas I like the more volatile instruments like gold, GBP, AUD, Euro, Yen, oil as well. But still, Euro USD is quite easy to trade, to be honest with you. So that's just a few markups on the 30-minute there. Here again, I've just placed on the highlighted areas just to see the significant highs, some of the significant lows which are formed in the market. And as you can see, I've just gone along and I've just traced it all the way down. We have this huge move to the downside over here. And if we went in on the 30, okay, we have the high, and then we have this area right there. Okay, so we respected the day. Okay, this is where I've dragged that area from. That's a daily spike. We've came into mid London session 1, and then US session, we've more or less tapped that area once more. We're in this strong consolidation phase where then the price has moved very erratically, but here we have a lower high than the previous, and then we have equal high, and then we have these two are lower highs in comparison to this one. So we are trailing, as you can see, lower low there as well, and then we've had a nice dump to the downside. 1.2200 right there, coming across there, nice psychological level as well, round number, which this has played from. And then at the end of the day, Friday, we've whipped back up, as you can see, US session, New York just pushes all the way back into that original range. So this range is quite important for what's going to happen for the week ahead. For the week ahead, I suspect that the market, Euro USD, could potentially trail down, test one of these areas again, and then start to move to the upside. But again, knowing the next move on this 10-year yield over here would greatly benefit on the fundamental side of things as to where to project euro dollar next. I think we can come all the way back up to 2,300 into the highs, because we can see higher low, higher low. This could be a new higher low right there, and we could start to scoop above. This area is so important on Euro USD, 1.2170. Again, that's just derived from the weekly highs and the weekly lows from the wicks. Coming a little bit lower now, which is one of the favored time frames or favored sectors of time zones and time frames to trade Euro USD on, is a 7 and 2, because of the erratic movements that we see sometimes and the pointless movements, so to speak. So here we can see the market pushes back to the upside, and the 7-minute, again, you can use this on the 7 to find our small areas where the market's found a top, push down, the market comes back to retest that area for liquidity, and then we see the overall move. It's a beautiful example of it there, but you can find many examples like this going through the charts, not just euro, but all of them. We can see over here where the low was formed, low was created. So we had one push, rejection, secondary push, and then here, right there, the solid area to look for. So for instance, if you suspect, better still if we tested this area on the weekly, but better still after that secondary push, the market breaks back above that area right here, that could be a cause for buy. That's boom, okay, buy trade. We have snapped the last area, okay, the last lower high, and after the final push to the downside, and 1352 here, where the market is basically switching into the US session. So 13 around here for 1400 hours, 2 p.m. and we get 227, 230, 245. The market is swiftly reversed back into that range, back into that region. So we can use these micro areas. See how that looks on the 2-minute. We can use these micro areas to actually help us fabricate. Okay, I have one on there as well that I placed on. We can use the micro areas to help us fabricate the pinpoint accuracy areas and zones where the market could be ready for, and that's one that I placed on as well. Okay, on the 2 minute, as you can see, we have the support, the resistance, we have the push to the downside, we have the full reversal, and we break back above. That's calls for buy. That's a straight calls for buy. And if we wanted to continue to contain, okay, area right there as well, and we can really dial in, really zoom in, we have this area right there as well. So we're more or less, the market is stepping up, step, and we can really get deeply involved by going through with the rectangle tool on the 2 minute time frame to point out these small regions, because again, the lower time frame, especially the 2 minute, is going to give us high accuracy areas where the market respects. And all of this kind of, you see how accurate it is and how the market's reacting and responding to this time frame and these areas. It just takes a little bit of practice, but then it opens your eyes up to how much you've actually been missing if you've never gone into this sector before. So let's just go back a little bit over here. Okay, even small consolidation areas like this. So let's just focus on this area for a second. Now, if you look at the 30 minute time frame in that area, this is how I would approach. So the 30 minute time frame, okay, we have that right there. Let's bring that to that. So 30 minute, we have this area. We have number one, weekly resistance. We have a daily area right here on the spike. That's this daily spike. We have our 30 minute area traced on from the bodies of the candles. So we have initial point, secondary point, third point drop. Then we have the supportive area, which is the weekly as well. We have mixed signaling on the highs and lows in here, because we are in consolidation, but the market does one drive, two drive, lots of mess, but we stay afloat here at 1.2242. We have a lower swing high from the initial. Okay, so we have the first drive, we have the change of drive, and then we have the initial after drive, which then starts to change the structure of the market. With that being said, okay, 26th of May right there, let's go into the 7 minute. 7 minute, we can clearly see, okay, we can clearly see that 43 to 61, that's still 19-20 pips right there. Here we're looking at some high accuracy points and formats. Now let's have a look at the 2 minute, how that looks on the 2 minute time frame. Okay, so over here on a 2 minute, if we're expecting and we're looking for an area to the price action, to rebound from a certain area, so we have our suspicions at this point on the third touch that the market may start to break down. Going into the 2 minute time frame, real time, okay, and what we can do, we can go in there, we can place our highlighted zone on. If you want, we can even go in now and tag this area 1.2263 for future reference. We could have okay, this is my projected price target number one, okay, back into the weekly and so on and so forth. But even that there is a pretty decent trade, because it's going to happen in a short space of time. And even though it's only 62 to 42, it's 20 pips, you could use a 10 pip stop with this, and you can actually scale into positions as well. You can add the positions as the momentum forces through and breaks lower boundaries. So number one, what we could look at, we could do this. Oh no, sorry. Basically this tool here, the arrow tool. Okay, so this is more like a trend line technique, if you will, which is we're waiting for the break in momentum and the breakdown in price. 1 minute. Okay, so we put that there and there. So we're only going to see this one here, and we want to put on the arrow. Okay, we don't want that arrow there, we want this one normal and an arrow. Cool, nice and neat. And what we can also do as well is pick out the last point. Of course, we've got 1, 2, 3. What we're looking for, we need that area to break down in price. So when we're looking for the trade opportunity here, and look at the time, it's 6. We're coming into the London session as well, 6 a.m. GMT London time, and we're looking for the market to come out of Asia's consolidation. We've seen what happened on the 30 minute, we've seen what happened on the 7 minute, and now we're looking for a breakdown in price. Here's your breakdown in price. Boom, short opportunities down into that level right there. Even though we are going to get these swift pullbacks sometimes, and they are going to be a lot more nerve-wracking for many people who's just coming into the 2 minute time frame, but again, we can track and trace. Okay, one high made, secondary high, boom, can we go again? Okay, and so on and so forth. So we're getting real into the finer details of the market, and then so on and so forth. Again, you know, I can see this is going to be a nice 7-minute double top, so to speak. And over here as well, we plotted this on from the 30-minute time frame. So we have the initial high, secondary high comes in just as the US session starts. We can see, okay, we can see where, we should modify that right there. We can see what the high is. We can see that the price has been broken down, test. Here in this scenario, what I would do, I'll take the last swing area low. As you can see, we could even say to ourselves that the market is in a small consolidation grid. Boom, breakdown in price. Short, stops above the other end, nice and tight, trail it down to the next area. And obviously, think about how this is going to look every 30 minutes. If you get a nice bearish bar closure on the 30-minute and you've entered here off the break candle, then by all means, you can bring your stop to the entry and then ride the momentum down. So you have to keep switching. You switch between these 3 time frames. Okay, so we come in as well. Let me let's modify that. Okay, and then going into this area, this is just stage consolidation. These are kind of dangerous anyway. When this happens in the market and you can see the market's up, down, up, down, up, down, simply leave that pair for the session or even the day sometimes. There's going to be many other opportunities out there. Over here, same thing, breakdown in price. On this specific example, just on the 2 minutes, we can see consolidation zone patch, and this is London session, born London, breakdown in price, breakdown in price, all the way to the lower spectrum. And then again, as you can see, once them lows are made, final drive, we can see that 1, 2, that was respected once. Then here we have our 7-minute area as well. So it's broke the 7-minute area, broke the 2-minute area, but that 7-minute area could actually be a 2-minute area if you really wanted to just modify things right there. Break above that area, we can see that the US is now stepping in. It's 2 p.m. and the market starts to accelerate to the upside and then consolidates back in the original range, which it was in for 27th to just over a day, maybe like 36 hours or so. Okay, going into the 30, as you can see, let me just delete that for now. Coming back to the 30, again, all of the 2-minute areas, they are not shown on here because that's the beauty of keeping everything nice and hygienic, chart hygiene, so to speak, so we can have full clarity. So yeah, going forward, I feel that Euro USD, again, we have some mixed signaling on the daily time frames, but we are coming into a fresh month now. We could dip lower, and what I would be focused on is I know, okay, let's go back to the daily for a second. This daily spike at the bottom here, I'll go in and put the ray tool there. I'm going to the 7-minute quickly just to modify that and make sure it's bang on. It's bang on. There we go, bang on. So what could even happen is, like a worst case scenario, you have 1, 2, and then 3. Euro could trail to either one of these areas or directly down to the lows before shooting to the upside. But with this, I would wait until the New York session, to be honest with you, on Monday for the market to just find its feet. I don't want to get caught up in any fake moves, false volume, fake volume, low liquidity. I really want to let the market show me what it's going to do next, either by going to the upside, maybe reversing, or coming to the downside, ready to reverse to the upside, and keeping an eye on that US 10-year yield and the Astronomics fundamental videos. Let's go into GU for a second. GU had a few good trades on this last week. I was very happy with the price action and the movement. Now let's start with, okay, a bit messy over here. Okay, going into, let's look at the day. Actually, no, start with a week on this one. Weekly GU. Now, pound on a weekly on any pound pair can be a bit of a nightmare at times, okay? So what we can see here is pound is at these highs. This high here, 1.4241, we can see that we've more or less trailed all the way back up. Right, so what I'm going to do now is The one thing that sticks out to me though on pound is that, can you see here with this high, which I can just modify a tad onto the spike directly, we had the week after we opened, trailed a little bit lower, but then we came all the way up at one point. This is a full bullish candle, and then the market smashed it back down. Okay, next we gapped higher a little bit, trailed down again, more or less neck and neck with a body in the opening price of the previous week right there, and then we came high, but we actually respected the highs of the previous week. So this here is like an inside bar. This bar is inside this one, so it tells us that consolidation could potentially start to build up. However, inside bars, I only really focus on them if it's a daily time frame. What's good here for pound is that the closure is actually above the weekly, and you'll see as you trail this, you know, these foundations and portions of strategy, you'll see how accurate these are when they're plotted correctly. So I've just modified that one there, but we are above it by around 13 pips. Okay, coming into here, let me remove these off the daily. I didn't change the settings beforehand. I just wanted to show you that today. So nice clean daily time frame. Let's see what we can do with the ray over here. Boom, that was one of our first highs. So what we can see clearly here on GBP USD is that the consolidation band has stayed within the daily raise. Now I have mentioned, I will put another one right there too, because again we have a range within a range, so to speak, a range within a range, and we retested that area right there too. Okay, we have this area here, but I'm not going to congest that too much, but just by eye and just by the crosshair you can see that, whoa, it's respected very, very well. So pound right now is in a huge area of consolidation. What we can see is that higher low, higher low, higher low, well, higher low, higher low. These are the main ones, are 1, 2, and then 3. Pound could be in for an explosive move, and I am looking at potentially upside. Why? Because of this monthly candle. Huge move. We took out the wicks bodies nearly, you know, we've done so much volume in comparison to the last 3 weeks that we could be in for a huge move to the upside. Now these are my areas, and these are some of the trades. It's one of the trades that I took last week straight off the weekly. I seen let's just start with the 30-minute for a second, but 30-minute area, that was in Asia popped to the upside, melted back down into London swiftly reversed, tested the area again, as you can see there, 10:30 in the morning, 11, we came back below. Okay, I think this is a 7-minute area, what I've got on there as well. We broke below that, retested the 7-minute area, and we retested the weekly. Came into US pumped it up one more time as well, swiftly reversed, and then we trailed down and respected that area right there, which is the daily. I was expecting the market to push through a little more, but we didn't get that. However, it's no drama. And then we started to reverse to the upside. So what I can see here clearly is on that upside reversal, 230 US again are pushing this higher. I can see a few areas of concern. Okay, so here is a good region to plot on. We have a lot of confusion on the pound. There was a lot of confusion, these mad dips that we'll look at in a minute on the 7-minute chart, but then we had the push to the highs, and we actually took out the previous high as well, 1.4171, and then we have the highs there at 1.4176, and this high trails in at 82, and then it was more or less a mess from there. So the price action on pound hasn't been the easiest to read on these higher time frames. So let's have a look at the 7-minute. So on the 7-minute, we can clearly see over here, that's our 30-minute area, and I'm sure that we could help ourselves by really focusing on these smaller details. So we had this sell-off here, then we had London session about to kick in, then over here we had this area. So we're looking at what, so see these extravagant pullbacks, boom, and then it leaves the wick, and a few more wicks are formed. That's money coming out of the market, money being pushed back in at the lows. So the money's been pushed back in at the lows, 1, boom. 2, that's what causes the extreme volatility afterwards. Money's coming out, money's coming in, money's coming out, money's coming in, money's coming out. Here we have the low right there, and then after all of these wicks and a little bit of confusion, let's zoom in there, it's hurting my eyes right now, we have boom again, and then market picks up. 12 o'clock, that was down to some news, I believe. I would have to go back and check that, but again, stay on point with all of the fundamentals on your own journey. Make sure you check them every day. So that's an explosive move there, where the pound completely shifted paradigms. Look, boom, then started to trade above the weekly. Same thing, pull back, long, pull back, long. Long, this created the daily spike, the daily high, but similar to euro, to be honest, the price action isn't, it's a little bit all over the place, to be honest with you. It's not the easiest thing in the world to read. So that's why the 7 minute, and again in the 2 minute time frame, here I played this is one of my trades last week. I placed this area on the 7 minute of the body. I noticed that the market was coming up, pushing through, so into London pushed it into the highs, stayed below this area at 1.4206, came into 4200 psychological level as well, and then that was an easy sell off. So if you look at this 7 minute, come into the 2 minute, look at the 2 minute breakdown, how price is broken down on the 2 minute. So we have our pump into London, okay, 2 minute area broken, another 2 minute area here. I'm going to take this one off, that's no longer relevant, then we have the high up here which was formed, then pullback, lower high. Okay, so after we see the first lower high being formed, we could say to ourselves, okay, that's an area which can't be breached, and then we start to break down in price, lower high, and then slowly but surely price just unfolds in our favor. Bang. Okay, tracking and tracing, one over here as well, a nice one there which was just completely taken out, retested, so on and so forth, and the market is just breaking down in price patterns, easy to read. But then you get into here, so again you have to take notes, and this is why it's good that you've gone through Astro 2.0, because you get familiar with the time zones. So around 2 o'clock, 2:45, the market can easily change direction, start to reverse, starts to really fuck us over if we're in a bad position, or we're not paying attention. So that can be your cue to say, okay, cool, I know the US session starting now. London absolutely, first fakie on London, then London dumps the price. The US session's coming in, maybe it's time to get the fuck out of the trade and see, there's another opportunity there. Boom, broken back above the weekly. And then volume starts to die out towards the end of the day because it's Friday. And even here as well, on the 7 minute time frame, you can clearly see it's a significant high, lower swing high, okay? And this could also be counted as a lower swing. With that being said, to be honest, I'll take that away, and I will just go in and put that there as well. These aren't marking, by the way, they're not specifically marking on low swing high points, so just doing highs and lows in significant areas as well, just for, excuse me, just for the sake of letting the eyes tell the brain something in a much more rapid pace, to be honest with you. And you'll see as you start to practice this, you can just glance at it and you can see, okay, there's the highs, there's the lows, cool, let me be familiarized with that. And even down here as well, it's a nice practice, to be honest with you. Keep everything nice and neat. That's the way we want to do. I always want to be organized. Simplicity, neatness, and so on and so forth there on pound. So that's EP2. Let's move on.